Hello traders, good evening. Welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Before I go ahead in this video, because of this monsoon season, heavy rains since last possibly more than 10 days, I guess, whomever I'm calling, people say that they are suffering from flu or they're suffering from possibly viral fever, cold, cough. So I wish all of you stay healthy and stay safe, first of all. And I also wish that all of you have made a lot of money in this rally. And now the main question comes that, there are times in the market when you go aggressive, start making money when there is a new trend, either on the upside, either on the downside. And apart from this trend, there are also times when you try to safeguard your portfolio when market starts to go sideways for a while. So are we within this scenario or are we within this scenario? Let's find out that in today's video. As usual, I'll be starting first with the Nifty weekly time frame chart. So when I'm trying to analyze this chart, what we can see is that the trend is up. In the previous week, we can see there is a inverted hammer, or you can call it a shooting star. And then we have basically a spinning top, which clearly says that in the previous candle, there was some sort of selling pressure evident at 20,000 levels, close to that 20,000 levels, although the high which was made last week was 19,991, but we can say that the psychological level 20,000 was almost hit. Okay. And since it was a psychological level and just above that 150 points, there was a big resistance. I guess market did understand that and started coming down. Previous week, we can say there was a spinning top, so it is a sign of indecision. Also, we can see that the RSI in the weekly time frame chart went above 70 and now it's trying to come down. Now, if we look at the daily time frame chart, what we can see is the trend is currently flat. But if you remember in the previous Nifty and Bank Nifty short-term view, which I shared 3 days back, I clearly told all of you that this is a decent support for Nifty spot. 19,540, 19,000, even 570 to 19,540, 550 is a decent support. And we can see that there is a small hammer over here. The question is this hammer very, very important? According to me, fine, it's okay. But currently, I'm not interested that much in positive candles. The reason for that is that the weekly RSI is still above 70. And there is a possibility that, yes, until and unless we do not close below this 19,540, or maybe even you can see in round figure 19,500 if you want to have some extra cushion for yourself. The longer we stay above 19,500, the higher the chances that markets may not come down that fast and we will continue to possibly consolidate. In case if we take off vertically on the upside and try to hit once again the 20,000 mark, I'll be a bit surprised because I assume that some sort of sideways move or a consolidation move will be healthy for the market right now, because this rally, you see this particular rally and see this rally, this has been very different. Both these rallies are very different, and the one which goes vertical doesn't sustain very long. So if you want this rally to sustain longer in the market, then some sort of sideways move is very, very important. And all of us know that when market goes sideways, it is not that easy to make money. But we'll find out that later on in this video, that are there any more sectoral indices which are going to help you to initiate long trades and make money within its constituents or its stocks. So let's concentrate now on the Bank Nifty. Bank Nifty in comparison to Nifty is much different. The strength in Bank Nifty is much different. And the reason for that, it is, yes, the RSI went above 70 in the weekly time frame chart of Bank Nifty, but still it doesn't seem to be that much overstretched. Yes, there is some sort of selling surely available over here at 45,170, as this is the weekly Fibonacci extension at 127.20%. but I guess overall state of trend is still healthy. So longer the time we stay above this recent high, higher the chances that Bank Nifty will keep going higher. If we look at the daily time frame chart, again in my previous video I had shared a support band with all of you, which was from 45,845 to 45,428. Now, if you check properly, I had shared this before 3 to 4 days, I guess. If you check the hourly time frame chart, the prices did come down. Again, it bounced back. Again, on Friday, in intraday, the prices did go below this particular support band. But in closing time, again, there is a hammer and there is a bullish belt. Not a bullish belt hold, but a positive candle. And the prices have closed within the support band. Again, I'll make myself clear. I am still not expecting a vertical rally or an immediate rally in the Bank Nifty. If it happens, I'll surely be surprised because I believe this rally in Bank Nifty has been, going on since very long. So some sort of consolidation or a sideways move, and after that, if you find upside move, short-term upside move, that will be better for the market. But once again, just be careful about this particular support band. The lower end is 45,428. So in round figure, if we close below 45,400, then probably some sort of selling will be expected on the downside. Not much, but a little bit, yes. PSU banks. Now, if you check the larger picture as the state of trend, you can see overall state of trend is very strong. But yes, we have reached to this particular resistance. This was the previous high in PSU banks. We are almost trading there. So yes, there is a sort of sense of resistance coming in, but there is no pattern which says that the PSU banks are topping out or something. But yes, in the short term, they have run up too much. And I believe some sort of consolidation again in the PSU banks. Again, when the stocks consolidate, what happens is that the risk reward ratio for a swing trader or a positional trader improves. The stop losses get smaller. So with a smaller stop loss, you can initiate better trades, because initiating trades when the stock or the index has already run up too much doesn't make sense. And when you try to initiate or force a trade in an index or a stock when it is a little bit overbought, then the chances of making money reduces considerably. Now, within this PSU banking pack, there are two stocks which I like personally. One is obviously the king of PSU banking stocks, which is SBI. It's looking very, very strong. Again, I repeat, very, very strong, not just strong, but very, very strong. But this is certainly not the place where I would like to initiate a new swing trade. If this stock corrects, if it consolidates, if it comes down, and probably at a juncture when the risk reward ratio is better, I would surely like to grasp that opportunity. There is one more stock. As of now, it's not looking that interesting. It's very, very lackluster, and I have no interest to initiate trades in this particular stock. But this stock has not rallied that much. All other stocks, if you compare with this Bank of Baroda, this stock has not rallied much. So I guess we can see very well that there is a sense of resistance due to which the stock is not able to rally. Once we see a decent big green candle closing above 204, 205 in the shorter term time frame charts, the chances of the stock to go higher will increase. Okay. Now let's have a look at the private banking pack. In the private banking pack, again, if you check this particular chart and if you check exactly the Bank Nifty chart, both of look very much similar. So overall state of trend is very, very strong. There was one stock which I shared with all of you. If you remember, it was HDFC Bank. And I had clearly told that it needs to close, sustain above 1710, 1720. If that happens, we'll be able to see a decent rally. But what happened? It could not close above it because this was a resistance, and the resistance which I shared with all of you was respected, and there was no positive view which got initiated over here. So coming back to the private banking chart, overall things are looking positive, but again, some sort of consolidation will be probable. As of now, I have no stocks to share with all of you in the private banking pack. So let's wait and watch and see what happens. Energy pack, if you remember, probably last couple of weeks, you know that someone at my home was not well, and I could not share my weekly sectoral analysis of or any other educational videos with all of you. But if you remember, if you're a consistent viewer of my channel, you would remember I had clearly told that once we close above this zone, then a decent rally will be probable in the oil and gas pack, and you can see that there is a decent trend line breakout happening in the energy pack, in the oil and gas pack. And if you see the daily chart, yes, things are a little bit overstretched. RSI is also near to 70 mark. Even the weekly RSI is trying to test almost near the 70. It's not above 70, but it's near 70. I guess the RSI, weekly RSI is close to 67.95 or 68. So things are fine, but yes, they are a little bit overstretched. And if you look at these stocks, like Reliance has performed well. Again, if you check the weekly candle of Reliance, you can see there is an inverted hammer, and you can also see that the stock is slightly overstretched. So I guess some sort of consolidation or profit booking in Reliance Industries, if it happens, again, it will improve the risk reward ratio in this particular stock. And please keep a watch on this stock consistently, because there are chances that the oil and gas may continue to outperform in near weeks or months if after the consolidation they start rallying once again. You can check ONGC. ONGC has also performed nicely. And after this, again, weekly time frame charts, you can see IOC has performed nicely. You can see the daily chart. So many of these stocks have performed, but they were overstretched a bit and they needed some sort of correction. And Hind Petro and BPCL, especially these two stocks, are type of stocks. They don't go up or go down very slowly. They just go in zigzag modes. Like you can see up, down, up, sideways, up, and suddenly down. So it's just like a flash. If you're late, you will miss the train. So basically they have come down and they're trying to consolidate as of now. So we'll wait and watch. And the most strongest stock, according to me, in this entire lot is GAIL. And I assume, yes, in the daily chart, you will see that the RSI is well above 70. So some sort of profit booking or consolidation cannot be ignored in this stock, but possibly after this consolidation is over, and if at all it happens, there's a very high chance that this stock might continue to rally for the next few weeks also. So if you're a swing trader, you can keep watch on this stock. Not a good idea to jump in right now, but any dip, any consolidation would be a right time to get into the stock. Fine. Let's go to the next sectoral index, and that is metal pack. Metal pack has slowly and steadily going up. You can see the way the indices are rallying. And in fact, all these stocks also, metal stocks, have been rallying pretty nicely. You can see Tata Steel, you can see JSW Steel, you can see Jindal Steel, you can see SAIL. Almost all of these stocks have rallied pretty nicely. Only worry is that the candles that these stocks are making are very large in nature. So the volatility is slightly on the upside, and you can say that the stop losses could be also on the larger side, but that's okay. Overall view on this particular index, on the sectoral index and its constituents, is still positive. And one stock, if I would like to pick among all these stocks, is JSW Steel. All the stocks are positive, but if you want me to pick one stock, then I guess JSW Steel is that particular stock which has the power to go up pretty nicely, pretty confidently. Auto pack, according to me, you can clearly see that this is the resistance somewhere over here in weekly time frame, which is 16,190, and we made a high of 15,951. And if you check the weekly candle, last three candles were doji, small hanging man, and a slightly large inverted hammer. And you can see RSI was well above 78. So I believe the entire sector is currently in a consolidation mode. Even if it comes down a little bit, I will not be surprised. If you are a trader who is holding stocks in the auto pack, from from much lower levels. Maybe if you're holding Hero Honda from this level or this level or this level, whatever level you're holding, if your trailing stop losses are not hit, I would not suggest anyone to get out because the trend is still up. If the prices trigger your stop losses, if the prices trigger your trailing stop losses, then yes, you need to get out. But as a trader, I would not be comfortable initiating new trades, new positional or even new swing trades at this juncture because many of these stocks have rallied pretty nicely and they seem slightly overstretched. So a bit of consolidation, a bit of profit booking would be better. And if you remember in my previous Nifty and Bank Nifty short-term view, I had suggested this stock Bharat Forge for a swing trade, and I had clearly stated that if the stock trades above 860.65, okay, it's over here, the hourly time frame chart, 860.65, you can see this breakout, pretty nice breakout, then the stock could go higher. And you can see within a matter of 3 to 4 days from 865, stock did test almost 916, 920. So probably if you are a short-term trader, you can book profits and get out of this stock. Okay. Now let's have a look at one another sector. IT pack. IT pack, I have absolutely no views because the way IT pack was going recently was pretty nice. But this gap down has once again, multiple times, they have tried and destroyed the beauty of the chart. So again, I want to stay away from IT pack and say nothing about it. I'll wait patiently. Finance pack. Finance pack is again one of the stronger sectors out there, and currently the trend is up in the weekly time frame charts. RSI has just dipped below from the 70 levels, and as a trader, yes, you can have a look at this particular sector with a viewpoint of a swing trader. And if I want to be interested in a swing trade, possibly my pick of the stocks could be Bajaj Finance, but you'll have to be very, very careful. And the reason for that is that the sell-off which did happen over here was pretty sharp. It was very, very sharp. So you'll have to be very, very careful because what happens is when the sell-offs are very sharp, even after the first breakout, the stock will consolidate and again go down and trigger your stop losses. So you'll have to be very smart. But yes, if I want to pick a stock within the finance pack, it will be Bajaj Finance. There is one another stock which is L&T Finance Holding. Yes, in the weekly time frame chart, you look much overstretched. I can agree to that. In the daily time frame chart also, it's not looking very, very attractive. I agree to that. But in the hourly time frame charts, things are different. If you see the stock is looking attractive. So as a trader, you need to understand this is a resistance band for the stock. So if it closes above 134 or 135 in the hourly time frame chart, as a swing trader, I would like to focus on the stock L&T Finance Holding, but only with a viewpoint of a short-term trade, nothing more than that, not a positional trade for sure. Fine, let's go ahead with the FMCG pack. Now, if I look the FMCG pack in the weekly time frame chart, yes, I can completely understand your thought process that the sector is in an uptrend, but it is overstretched, RSI well above 70. But if you have a look at the daily time frame chart, it's not that interesting, not at all interesting because the trend is absolutely flat. If the trend is looking something like this above the moving averages, yes, it looks very attractive. This is certainly not great because we don't know what's going to happen over here. It can even go further down. But what we can see is we do have a trend line support over here. So as of now, as a trader, I am not interested in the FMCG pack. But if I get a breakout in a particular stock, then I would surely be interested. And that stock for me is going to be Dabur. Dabur has already provided a fresh breakout in this particular sector. If you have a look in the early time frame charts, it has given a very good breakout. It has given a very good breakout at this level, 579 approx. Yes, we are slightly late, couple of rupees late, but it's fine because we are safer also. We are trying to trade above this high. So I assume if the bullishness in the FMCG pack continues, then this stock could go higher. Again, with the viewpoint only of a swing trader, not a positional trader at all. Consumption pack again, the weekly time frame looks overstretched. Daily time frame, again, I'm not interested that much. The trend is flat, and I cannot see much of the stocks extremely mouth-watering as of now in the consumption pack. So I'd like to wait and watch. But overall, as a swing trader, I would keep my eyes open. If I find any good opportunity, only then I would like to pounce upon that. But otherwise, I would stay away. Fine. The next sector is infra pack. I would like to completely stay away from this sector with a viewpoint that if I do not have a position in any of the stocks in this sector, I would like to stay away, because you can see the way the sector has rallied, the stocks have rallied within this sector. I guess the sector is pretty much overstretched. RSI well above 70 in the daily and the weekly time frame chart. It's a really good candidate for some sort of profit booking. If you're holding any stocks from lower levels, consider profit booking, at least partial profit booking, and rest then you can keep holding with a trailing stop loss. But at this juncture, I would certainly not advise or even myself get into this sector at this particular level. I would wait patiently. Pharma pack, vertical rally over here, and this is a blow-off rally. I can see this. I would consider as a trader that, and be mentally ready also, that if I'm holding any stocks, then there is a pretty decent chance that some sort of consolidation or a drop in the price could happen. And being mentally ready as a trader always helps you, because when we see these big rallies coming up in the sector or in the stocks, generally your expectation from that particular trade increases to multifold levels, and you start feeling that this is the trade of my life. But my friends, there is no trade which is the trade of your life. At one point of time, one day that trade will end. When will it happen? We don't know. But yes, there are signs that this seems to be, as of now, a blow-off rally for sure. So keep trailing your stop losses and book partial profits. Wait with trailing stop losses. Whenever they get hit, just exit. Simple as that. Realty pack, again, I would give the same thing. There were opportunities in between as a trader. In DLF, when this stock rallied, I guess this was a beautiful opportunity. There were opportunities in some other stock also. But as of now, even as a swing trader, even as a positional trader, I would not like to jump in this sector or its constituents. I would like to wait patiently and wait for the right opportunity. PSE sector, public sector also, same view from my side. Not a time to jump into this sector at this point of time. As a swing trader, as a positional trader, would like to book partial profits, hold my trades which I'm holding from a much lower level with the trailing stop losses. If they get hit, I'll exit. And same will go for mid cap. Mid cap is like way above the 70 levels. I guess it is above 80 also. So you can see how nicely the stocks have rallied over here. And even you can see the daily RSI is well above 70. It's close to the 75, 76 mark. Again, not interested to initiate any new trades, positional trades, or even swing trades at this juncture. If these sectors like infra, pharma, realty, PSE sector, mid-cap, if they come down, and when they come down, I would like to possibly, I would like to revisit these charts. I would possibly, if needed, I would change my view, not otherwise. Like if these sectors come down vertically like this, then something is really wrong, because when this sort of profit booking happens, this is dangerous. So how these sectors come down and when they come down, it's a different thing. So whenever this happens, I would like to revisit these charts, and if necessary, I would change my view. But as of now, at this level, I'm not going to deploy my money in these sector or these stocks. Again, seeing the entire sectoral indices, my friends, this is not a time to possibly go extremely aggressive on the pedal. Stay light. If you're holding positions from lower levels, keep holding them with the trailing stop losses. Do not go for premature exits, because if the market doesn't come down, if the market stays above it and your stock specific rally continues, you will miss a lot of profits on the upside. So try to initiate smaller trades rather than initiating positional trades. Look for swing trades. Concentrate on the sectors and the stocks which I shared, or if you have anything from your side, but keep your position sizing in check and go for smaller size trades as of now. Not a good time to possibly jump in very, very aggressive at this point of time. All right. So I hope this video has been helpful to you, and this video will help you to understand how markets will move in the next few days, and maybe even more than that in terms of especially these four sectors: infra, pharma, realty, PSE, and possibly also midcap. All right. Stay safe, trade safely. Thank you.